Do you want to get into crypto? Are you looking for some low-risk crypto because you don't want to miss out on this $2 trillion industry? To help me identify low-risk crypto, I use 5 different factors: market cap, TVL, Mcap over TVL, Dapp Revenue, and the price-to-earning ratio. Let's talk about why crypto is considered high risk. First of all, number 1, crypto is fully banned in China and 8 other countries. Number 2, most countries don't have clear laws regarding crypto. Number 3, most countries aren't clear about how much you're going to be taxed on your crypto profits. 5% or 30%? We don't know. Crypto is also very volatile, more so than the stock market or real estate. And there's also a lot of crypto scams and hacks right now, so you have to be super careful. Now, with all those problems, why would you even invest in crypto? So number 1, the crypto universe is exploding. NFTs, the metaverse, decentralized exchanges, there are $2 trillion in the crypto universe. Also, blockchain technology and crypto are somewhat outside of the sphere of influence of governments, banks, and big corporations. And finally, crypto gives you the opportunity to make a lot of money. Today we're looking at the lower risk cryptos. Factor number 1 is the market cap. The higher the market cap means the more amount of money that's been invested in a particular cryptocurrency or the underlying blockchain. So number 1 on the list with $811 billion is Bitcoin. Ethereum is half of that, $391 billion. So these are going to be the lower risk cryptos. I excluded Tether and USD because those are stable coins. And I also excluded XRP because it's in the middle of a giant federal lawsuit with the US government. So the top 6. Those 2, Binance, Solana, Terra, and Cardano. The second most important factor in identifying a low-risk crypto is the TVL, or total value locked. This is the amount of crypto and value locked into a blockchain in all the decentralized applications that run on that blockchain. Here we are at DeFi Llama, and we can see Ethereum has a total value locked of $121 billion. Terra has $27 billion locked into its system. Binance, $13 billion. Avalanche, $10 billion. Phantom, $6 billion. Next, I want to talk about a ratio called Mcap over TVL. Here we're at DeFi Llama, and we can see that Phantom has an Mcap over TVL of 0.52, meaning its crypto might be a pretty good bargain compared to the amount of crypto that is locked in to the decentralized applications that run on the Phantom blockchain. Terra also has a pretty good ratio as well. The number 4 factor to help us find low-risk cryptocurrencies is something called Dapp, or Decentralized Application Revenue. Here at Token Terminal, if you click on blockchains, we can see that the dApps running on Ethereum are making $496 million per month. The dApps on Binance, $51 million. Avalanche, $25 million. Bitcoin was not designed to have dApps running on it, which is why it's number 5. And we can see that Helium, Solana, Phantom are also up on that list. The 5th factor to help us find low-risk cryptocurrency is the P/E ratio. Just like with stocks, the price-to-earning ratio allows you to decide, is something overvalued or undervalued? Now, what's the difference between P/E versus Mcap over TVL? TVL is amount of crypto locked into the system, whereas E is earnings, Dapp revenue, or how much money those dApps are actually making. Here under Token Terminal, click on blockchains, and we can see that Ethereum is number 1 on the list with a P/E ratio of 79, which means you're not paying much for the amount of money that crypto is actually generating. Number 2 on the list, surprisingly, is Helium. Number 3, Avalanche. Number 4, another of my favorites, Phantom. This is my personal list of low-risk crypto. Remember, this is not financial advice. This is for entertainment purposes only. Number 1, Ethereum has a high market cap, number 1 TVL, number 1 Dapp revenue, number 1 P/E ratio. Bitcoin is number 2 based on its incredibly high market cap. It's really more like digital gold, a store of value. Avalanche, however, is making tons of money, so it's high in TVL, Dapp revenue, and the P/E ratio is decent. Number 4 is a surprising Phantom because it has a very good Dapp revenue and P/E ratio. And then number 5, I have Solana because it's pretty good at everything. Remember, with a diversified portfolio, you don't put all your eggs into one basket. It's better to buy a variety of cryptos. It increases your chance to make a profit, and even if one of these cryptos go down, you have the other 4 to compensate for your losses. This is Dr. Kidwell, 5 ways to identify low-risk crypto. Make sure to subscribe, smash that like button, and watch my other videos.